Looks like the housing market craters as new home sales get canceled at the highest rate on record. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Today is July the 12th. Randy Patrick here putting the realism back in real estate. And yeah, it's becoming a lot more real these days. This video is brought to you by our friends at Foreclosure.com. If you want to check out the distressed properties in your neighborhood, your backyard, go to gethousingdata.com. Gethousingdata.com. That's my affiliate link. You can go check it out. You can find out what's happening really in your neighborhood. You can track the distressed properties. You can see them growing. That's where the opportunity is. And just a quick little blurb here. I just pulled some information about the greater Tampa area where I'm at. So take a look at this is Hillsborough County. One of the counties, there's three counties that make up for the greater Tampa area. You got 1,659 pre-foreclosures there in Hillsborough County. That's Tampa proper. County over, Pinellas County, it's St. Pete's, Clearwater, over 1,000 pre-foreclosures. Pasco County, the county just up the road a bit here, we got about 650. So all in, about 3,325 pre-foreclosures sitting around doing nothing, waiting for us to jump on it, buy them, fix them, resell them, flip them, whatever we can do. That's why you want to go to gethousingdata.com to find this stuff out. Okay, so a lot of things are happening, and as I said, the market and things are moving at breakneck speed right now. I see it, I feel it, because of all the things that I'm doing in the marketplace right now. Literally 50 to 100 things on the go. It's out of control. So what am I seeing right now? More real estate investor interest and activity in the distressed housing market, because clearly that's what's going to happen. People are already starting to figure this out, all right? So I'm getting into more partnerships, arrangements, things like that, which we can talk about down the road. I'm seeing a lot more off-market properties hitting, becoming available. I see it every day. There's more and more of those things going on. An increase in on-market properties, which really is listings in the MLS. I'll give you an example. The county, the first one I mentioned here, Hillsborough County, which is really where Tampa's in. About 3 months ago, we had about 750 to 800 single-family home listings. Now we're about 2,800 single-family home listings. So in about 3 months, we've pretty much seen that almost triple, if not quadruple. So a lot going on. We're seeing price reductions for sure on active listed properties and on the off-market stuff. This week I might see something come across my desk on a great opportunity. Next week, guess what? $10,000 or $5,000 price reduction on that property. So it's starting to happen in the real world right now. Inquiries, people saying, find me a home. I want to jump in now. The marketplace is getting better. That's increased. And obviously the questions are, how can I get in the game? You want to know how to get in the game? Connect with me. I'll show you how to do it. I'll tell you what you have to do to get involved in the real estate business, either from an agent perspective or from a buyer perspective. So what I'm saying here is that don't let this pass you by. This is our second chance at a once-in-a-lifetime opportunity. If you missed the first housing crisis and the ability to buy properties dirt cheap, you'll have a second chance coming up here. So don't sit on the sidelines. That doesn't get you, don't wait, don't hesitate, and as I say, don't hedge. You hedge, you wait, it passes you by, and then you've missed the second chance at a once-in-a-lifetime opportunity. Very straightforward. I'll tell you what to do. Okay, looking for agents in Florida, in the Tampa area, agents in other parts of Florida, eventually other locations, because we have stuff that's going on right now. My short sale program is back for a limited time. Why? Because it's needed, because we're seeing the opportunities increase right now. If you want to get back on that good price for a limited time, then it's going to change to the more expensive and the full-blown foreclosure fortune program, which I'll be releasing in a couple of weeks. If you're in my neck of the woods, my Tampa Real Estate Investment Club, find it on Meetup. I had a meeting last night. We talked about the short sale process. Our attorney firm that we work with, the law firm was there, lead attorney was there. We talked about it with a bunch of people in the room. A lot of great information. I run these at least once a month. They're free to anybody to show up, and you get a lot of connections, a lot of good information. Go to meetup.com to find my Tampa Real Estate Investment Club. Okay, let's get to the meat and potatoes now here. So that's the landing page. Just, all you have to do is just join the group and you're going to get our notifications. Okay, here we go, guys. So before we get to the new home sales cratering, I want to talk about a few economic indicators of the market. So lumber prices. Yeah, you know what? Lumber prices, which warned us about inflation over a year ago, are again trying to tell us something. Well, lumber prices are an indicator of the overall economy, number one, and two, where the housing market's going. So you can see that lumber prices skyrocketed back during the pandemic, which affected new home prices, which affected rehabs and remodels. So everyone really got bent out of shape, and it became very difficult to work on projects when builders and rehabbers and stuff are, can't figure out what the price points are going to be, and also you can't get your hands on material. So it went out of control. It's dropped dramatically right now, and that's kind of where it's at. So we can see that they hit a record of 1,600 per 1,000 board feet in May 2021. Where we're now, we're at about a 50% decrease, and we're at 648 1,000 board feet right now. So the whole point, though, is that they say that lumber markets are the harbinger, whatever you want to pronounce that word, of big economic shifts early on in the pandemic, and today's slumping prices could be just as telling about the economy's future. I look at it going, prices will be dropping when we tag this up into the last part of our discussion here. There's no reason why lumber prices will continue to increase. As a matter of fact, they'll probably be decreasing based on the lack of demand that we're going to see starting pretty much now. So again, a leading indicator of what's happening in the marketplace. The unpredictability of lumber means that there's no guarantee prices will stay low, but given how prescient the market has been over the past few years, with fears of an economic contraction and possible recession looming, it will remain an important signal. So recession looming, that's someone's opinion. Are we in a recession right now? Pretty much we are, or it's happening as we speak. So I don't expect lumber to go up, and then tagging on where home prices are going and new construction is going, we should see prices dropping, and that's the way it should play out in the lumber world. But again, leading indicator of what's happening in our economy. Okay, so more, we'll call it economic indicators in the housing market. Loan Depot to fire another 2,000 workers as mortgage market implodes. So as I've always said, it's not one thing that causes the housing markets to crash or capitulate or shift, correct, whatever term you feel comfortable using, or you feel comfortable in your analysis of what's happening in the housing market. We all have our opinions, and I respect that. But you can't deny that obviously higher interest rates are causing problems overall in the marketplace. Problems on one end, good things on the other end if you're a home buyer. The point, though, is that your mortgage companies obviously ebb and flow with demand and volume, and they contract or grow with respect to loan originators and staff, etc. So Loan Depot to fire 2,000 workers. Here's the scoop on this. The company, which had 11,300 employees at the end of 2021, had already cut 2,800 jobs this year and expects to cut another 2,000 jobs to end 2022 with 6,500 employees. That's a pretty big cut. We anticipate continued challenging market conditions, with mortgage originations projected to decline by roughly half in 2022 from 2021, with including an accelerated decline in the second half of 2022, followed by a further decline in 2023, said the chief financial officer. So, this is a really good article to figure out where the market's going to play. So they've basically said we're taking our staff and we've cut it in half right now. We expect the second half of 2022, which we've just entered in, to actually have an accelerated decline, followed by a further decline in 2023. So, that to me, that's, somebody, a group who's, obviously they're originating loans and they need to know what's happening in the marketplace. They have to staff accordingly. And this affects them from a refi business, clearly, with respect to interest rates, but also from a purchase perspective as well, too. So they're getting hit on both ends. And, this to me is another indicator. This is just one originator, one loan company, one lender out of many. And if you start looking at the news, lots of lenders or their associated groups like this are actually, I guess you could say, reducing headcount and staff because volume is down, and they're not predicting any sort of swing on a positive scale over the next couple of years. So this, again, I think is a pretty big indicator of where the market's headed. One more thing to kind of, go down the path. Now, listen, if you enjoy the information that I am always talking about, if you could do me the great honor and subscribe to my channel, I'd really appreciate that. And if you think you're a subscriber or are a subscriber, if you could please verify, because I lose subscribers every day, that'd certainly help out my channel and help me grow. So once again, thank you for the patronage and for subscribing. Thank you. So let's continue. So this is really where we get in the meat and potatoes of the discussion here. This recession is looking like a depression. It is. We all know what's happening in the general economic world out there with respect to goods and services, supply chain issues, gas prices, food prices. Everything has gone up. It's becoming much more difficult to make ends meet on virtually all levels. So we're moving into recession. People are saying depression. I saw earlier today another yield curve inversion indicator happening. So lots of stuff are pointing to things not doing very well now in the very near future, and housing will become affected or is affected by that. So really, housing market craters as sales get canceled at the highest rate on record. So that's interesting. So we're talking, new home sales, right? Now, new home sales are basically, I guess you could say, difficult to track because it's a constant flux of data, and they're constantly being revised. What could be a positive month over month gets revised to be a different month over month, etc. So it's pretty difficult to figure stuff out. But obviously, Redfin here is saying, as a result of soaring mortgage rates and record home unaffordability, price cuts for new listings had exploded amid a collapse in buyer demand. The news flow from the frozen housing market has turned downright dismal. According to the latest Redfin data, home sales are getting canceled at the highest rate since the start of the pandemic. Now, when we actually take a look at some stuff here, 60,000 home purchase agreements fell through, equal to 14.9% of homes that went under contract that month. That's the highest percentage on record, except when, obviously, in 2020, when it ground to a halt with respect to coronavirus. So it compares to the 12.7% a month earlier, 11.2% a year earlier. So you can see that housing market's following, deals are falling through. That's just the way it goes. So shouldn't come as any surprise, but roughly 60,000 home purchase agreements fell. That's a pretty big number. So, what's going on in the marketplace? Well, I think we know that. The slowdown in housing market competition is giving home buyers room to negotiate, which is one reason why more of them are backing out of deals, which seems to make sense. Rising mortgage rates are also forcing home buyers to cancel home purchases. So if the rates were 5% when you made an offer, but reached 5.8% by the time the deal was set to close, you may no longer be able to afford or qualify that loan, which does make sense. So ultimately, when mortgage rates shot up in June, we saw a number of buyers back out of deals. Some had to bow out because they couldn't afford the loan. Some are more skittish due to economic uncertainty. So basically, the whole rate economic forum is playing havoc with buyers, which makes sense. So essentially, June home builder sentiment and survey results are in. The top themes are a lot of new home buyers are canceling. Price cuts are becoming fairly common. Drop in demand is finally cooling. Construction cost pressures, builder layoffs are also happening. From a real estate agent perspective, I know a lot of the agents out there are saying, you know what, when the housing market is in chaos and things are out of control, the new home builders, sort of dust off the real estate agent community, right? There's no incentives given. They want people to come through, to walk through open house, secure them that way. They don't like paying commissions. But when things change, now guess what? Now they're offering incentives to real estate agents to bring customers by. Now they're doing the nice things they used to do, dropping by with packages and cookies and breakfast at the offices and stuff like that. So it's a very fickle market. And also on the new home sales side, what you're going to find is that you're going to find deals. So in other words, we'll roll in closing costs. If you do, we'll give you X number of dollars worth of, incentives or upgrades, stuff like that. So now's the time to hit the new home purchase market where you can do deals and get things, at better price points or more bang for your buck with the new home builders. But this happens. This is a market cycle thing here. Just to put things in perspective, which I think is pretty funny, is market commentary to follow here. So obviously new home sales is cratering as well. They do have a lot more inventory out there than the existing home price point. Atlanta builder, someone turned out the lights on our sales in June. Austin builder, sales have fallen off a cliff. Birmingham builder, sales have fallen 75% the last 2 months in a further out community. A Boise builder, sales have slowed tremendously, expecting 15 to 20% reduction in most costs. Charlotte builder, the recession is looking like it's feeling like a big, long 5-year depression. Colorado Springs builder, amazing how fast a market can change. Dallas builder, framing labor has become readily available, suggesting housing starts to slow down and finally is showing its typical sign. Haven't raised prices in 3 months. Des Moines builder, starting to see trades hold off labor prices. Fort Myers builder, investor sales have stalled. I mean, I could go on. Grand Rapids, Greenville, Harrisburg, Houston, Kennewick, Melbourne, Nashville, Phoenix, Reno, Riverside, San Bernardino. San Diego builder, fewer people in the market than before. St. Louis builder, expecting to see opportunities for lower costs coming in the near future. In summary, it's going to get worse before it gets much worse. Simple as that. So this is what we're dealing with right now is, again, multiple scenarios, multiple situations. Existing home sales slowing down, more inventory coming on, people reducing pricing, people canceling deals. Same thing with home buyers here. Okay, so if you're into new home sales, you're expecting price point reductions. You're canceling your sales, or you can't afford it because of mortgage rate increases. So it's not just new. When things change, all right. As I said, it's not just one thing. So existing home sales are taking a beating, and price points will take a beating. And it's also going to work on the new home sales side as well to the builder market. So now we've got both sort of having negative issues, and that's what helps bring on a housing correction or housing crash or whatever you want to, whatever you want to call it, however you want to sort of categorize it, place it, etc. So this is what happens. This is a snippet of what's going on. We can talk for hours of what's going to happen in the future. All of this is just what's going on on the, I call, on market MLS, new home builder stuff you can find every day. What we don't mention, or what's not being mentioned in mainstream media at any point in time right now, is the coming of foreclosures. Lenders right now are getting through the backlog. They're refiling. They're restarting. They want to clean up all the stuff pre-COVID. They want to get that done and over with. Why? Because the next wave of the COVID forbearances and foreclosures will be happening. And then as time goes on, we're going to have all the people who thought they had equity that didn't sell are going to find themselves to be SOL, out of luck, and are going to have to come to fruition of what's going to happen with their housing market. So all that stuff is increasing the shadow market, the behind the scenes stuff, which is what I track and what I do. As I said earlier in the video, there is a great interest in that marketplace. So where are we compared to last housing crisis? Well, a lot more people are interested in real estate. Real estate is no longer the American dream. It's now the number one asset class out there to acquire. Yes, having a cash flow real estate piece of our property is great to have. Hey, Airbnb works as well too. That could also have some issues in the future. People who took out large mortgages and ran the Airbnb curve now are having some adjustments to work through. So a lot of stuff's going to happen in the next little while. But the point, though, is to be positioned for what's going to happen, to be on the starting point, on the cusp of it, and that's where you can make the most of your opportunities. That's what we're doing right now. I literally involved in so many things I can't even describe. They're all good things. They're all positive things. It's more than just what I talk about here. There's some future stuff that we're doing as well too. Some really interesting things that's going to help drive opportunity for the investment, the retail side in our area as well. So again, as I mentioned, if you want more information on this and want to figure out how you can participate in your market, you can do it as a real estate agent. There's investor buyer. There's so much opportunity out there. As I said, too much to even discuss right here. Reach out to me, give me your phone number, let's hook up. All the stuff I talked about, there's a short window to get going, and then people are going to be involved, and we're going to be busy as all heck. So if you want to get involved now. Get involved before the masses start sniffing around. This is the opportunity to learn this stuff on the fly and to have a head start, because like the last housing crisis, everybody will figure this stuff out and want to participate when stuff does really hit the fan. So anyway, guys, thank you once again for the views, likes, comments. Please share the video with your family and friends. If you're not a subscriber, please subscribe. Look forward to speaking with you later this week.